Good morning, everyone. Welcome to Market Voice. Well, as part of the series from Warfield Wisdom, the Art of War, we have been seeing a lot of treaties or available warfield knowledge and trying to map it to trading activities. Recently we saw one of the topic on the supreme excellency of a warrior lies in winning the battle without much of a fighting. In continuation of that, today we will be talking about over trading. Is it good to over trade? What is the optimum level of trading activities that we need to undertake? In fact, there is no thumb rule as such, but then we should know the symptoms of over trading, so that when these kind of symptoms happen, then we know we are on the path of over trading. Supposing you come with a 1 lakh rupees of capital, there is no one right way of telling what would be the optimal trading level for you. For example, for an intraday trader, we can establish some common available information on these aspects, but you cannot pinpoint to one thing and say this is the right method. Some intraday traders will have only one trade a day. Some scalpers will do at least 4 to 5 trades a day. There are some intraday traders who do multiple trades, more than one trades, but ensure they close all the positions intraday itself. There are some players who are into the swing mode or various time frames. We have in one of the earlier discussion we have talked about the time frames, time and timing, understanding the importance of time and timing. While doing the discussion on that topic, I had told it is important that we time the market also and we give very specific time to the market. Here we are talking of the frequency of the trades. And how do we understand a person is over trading or not? Some of the symptoms where we can identify a trader seems to be in the over trading zone are, first and foremost, if he is doing the trades based on FOMO feeling, which is fear of missing out. If he has these tendencies of FOMO, then anytime that trader can enter into more trades without his knowledge, because he has a fear of missing out. So the first symptom of over trading is FOMO. The second symptom is what you say revenge trading. I did one trade, I lost some money, I am an intraday trader, so in intraday itself I have to make one more trade and I have to make some positive returns. So what will happen in this kind of a tendency or the psychological aspect? The trader will take up more trades. His mind is camouflaged with the attitude of somehow he has to make a positive return today itself. So that will make him enter into more trades without analyzing the trades fully. So the second symptom is revenge trading. First one, FOMO, fear of missing out. Second one, losing some money in the initial trades and getting on a binge trade just to recover whatever is lost and ending up losing more. That is revenge trading. Third one, trading without a plan. When you don't have a plan itself, then obviously you don't know when to restrict yourself, when to put yourself in aggressive mode, because your plan does not discuss about those things at all. So you need to see his trading plan. So when somebody comes to me and asks me about trading, I talk to them as a counselor, as a coach, and I ask them, show me your trading plan. What is that you want to do? And without any much surprise, most traders do not have a specific trading plan before the start of the game. Run time. While the market is on, they make impromptu decisions. In fact, impromptu decision making is some fields it is very good. Impromptu speakers, a leader has to, if he is in any public field, he has to do impromptu speeches. He can't come prepared with a speech and then he can't deliver a speech. When there are dynamic questions, he should be able to address it as and when it happens. But when it comes to the market, it is some amount of preparation is required. He should know his trades beforehand, where if these levels come, then I will enter into this long trade or a short trade. Otherwise, I will stay away from the market. I will act as a spectator. I will not act as a participant. Let the market do something which I am thinking it will do, then only then I will enter into the game as a participant, and until then I will be a spectator. I will be a witness to what is happening. It is very important in the field of stock markets that we need to act as a witness without any bias. When a witness is called in the courtroom, the objective of calling a witness is he is the guy who has seen the event without any personal agenda or personal interest or without any subjectivity. That is why a witness is called. You also, as a market participant and as a market viewer, you need to witness the market without any bias, without any preconceived notions. Only then charts will also start revealing you a lot. So coming back to the discussion on this over trading, one, there is no thumb rule where we can fix and say this is the exact number of trades that you need to take for this time frame of trading. For a scalper, we cannot say just 4 trades. For an intraday trader, we cannot just say 1 trade. For a swing trader, we cannot just say 2 trades in 2 days. We cannot put an exact number. We can somewhat develop a basic thumb rule, but from the coach's point of view, if somebody asks me, I have to see the symptoms, then I can tell them whether they are over trading or not. And what are all the symptoms I watch are his trading patterns. Does it involve FOMO aspect? Does it involve revenge trading aspect? Does it involve trades without any plan, randomness? If there is a pattern to his trades, then we know okay, he has got a pattern, he is not making money, then we have to see the some entry rules or exit rules, stop losses, all of those things. But if trades are showing there is no pattern, there is no repeatable approach, then we know this guy has no trading plan. So if you want to really become a serious trader, then you need to have a kind of repeatable approach. Repeatable plans are very important. Once you see a gap up and you trade a certain way, then you should build a system. Whenever there is a gap up in the market, then this is how I am going to trade. Last time there was a gap up, I did this. This time there is a gap up, I will do something else. No, this kind of randomness in the approach or randomness in the behavior or randomness in the trades will not take us much forward. So if you want to really become a good trader, you have to get your lot of attitude, objective, psychological aspects right. You have to get your rules right, and to evolve all of these things, we need to observe our own patterns. Did I enter this trade because of FOMO? Did I enter this trade with revenge? Did I enter this, or did not enter a trade because of fear? Under trading is also one of the biggest factor. It's not just over trading. See, when you go very slow in your car, you will reach destination that much very late. You might be safe, but you will reach very late. And if you overdrive, if you accelerate too much, then there is a fear of accidents. So you need to balance your optimum speed depending on highway or depending on a local road. You should balance yourself in such a way like you will drive optimally and meet your objective. Trading is also very similar to your driving a car. You invest very less portion of your capital, then you can't do anything much. You invest all of your capital also, the chances of blowing out is high. So what is the optimum level of investment and trading activities depends on lot of factors that we need to discuss one on one. Only then we will be able to know the exact nature of the trading participant. So with this respect, remember one thing, under trading is also not good, over trading is also not good. Hitting the right balance is important, and when we talk of right balance, there is no one single approach. We need to see the symptoms, and only through trial and error we will be getting a rhythm on the trading activities. So in this respect, coming back to our discussion book, The Art of War, there is in the 3rd chapter, Attack Through Stratagem, the 6th treaty SunTzu talks is, the skillful leader subdues the enemy's troops without any fighting. He captures their cities without laying siege to them. He overthrows their kingdom without lengthy operations in the field. So what does he say? Skillful leader subdues the enemy troops without any fighting, which means as many less trades as possible you need to take, so that you will be in the game, and you have to ensure you take high probability trades. Once you take high probability trades, 1:4 kind of risk reward ratio trades, then definitely you will make more with less amount of entry and exits. So here SunTzu is saying, skillful leader subdues the enemy's troops without any fighting. He captures their cities without laying siege to them, and he overthrows the kingdom without lengthy operations in the field. So do not keep on trading one after the other, even when you are making profit. Even when you are making a profit, say you had decided yourself 2 trades a day, then you did your 2 trades, you ended up with some positive outcome. You see a very good third opportunity. Do not get carried away with greed and fears. Just stop the activity, because you have told yourself beforehand you will do only 2 trades, and you have to stick to that principle of, I have told myself 2 trades, no matter how much of a golden trade is presented as a 3rd trade, I will not take it, because there is always tomorrow. There is no certainty in the market. What might look like the golden trade might end up as a losing trade. Nobody can predict the trade beforehand. We can only have a kind of probabilities. Higher the probability, higher the chances of success. Higher the risk reward ratio, higher the chances of surviving and making some positive alpha. So this is all is there, that is to the market. So we need to understand that. So do not get into the over trading or too much of under trading also. Hit a right rhythm, and when we say hit a right rhythm, there is no scientific formula which will give you one figure. We need to observe the person's participant, or if you are a trader, you have to observe your own behavior and make your own rules accordingly. So this is with respect to over trading and the aspect of the 6th treaty, overthrow the enemy without lengthy operations in the field. Do not engage into lengthy operations that might hurt your psychological resources and also capital resources. Let us see one more topic tomorrow. Until then, Om Swasti.